late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back. So today we're going to jump into the macro. We're going to take a look at a lot of different charts. The markets are moving and we did get some bullish news, at least more bullish than what we've been looking at in the past. We still have yet to see the retaliation or the reaction from China. So we're going to jump over here on the other screen, take a look at what's going on. So essentially what we have seen here is the US is planning to drop their tariffs that they have announced on China, reduce them by 50%. This is the start of the negotiations between the two countries. We want to see this continue trending down. I don't think this is going to be enough for China to really just come in and kind of concede. We still obviously recognize the tariffs. You know, if it's reduced by 50%, I think we were looking at about 230% tariffs previously. So you're still in this massive tariff environment. China's kind of saying the opposite here. They want the tariffs to come down a lot more substantially. We basically see China saying the U.S. is abusing their tariffs, losing global support, and isolating itself on the global trade side of things. So we want to see, obviously, further de-escalation, but we can kind of go from, you know, a bit of a more cautious approach to the markets to potentially cautiously optimistic. So again, we need to wait and see the reaction from China. We want to see continued engagement, you know, more negotiations, de-escalation on that front for us to experience more relief in the markets. But the market's really reacting positively to the news. We also saw recently, we did talk in a video about how Donald Trump was saying he wants to fire Jerome Powell. He literally said they're exploring ways to fire Jerome Powell. He's now taken a 180 turn on that as well. So pretty hard to kind of keep up what's going on in the markets day to day when they seem to just be flip-flopping every few hours. You know, one day there's tariffs, one day there's not, and then the next day the tariffs are even bigger, then they're not. He's looking to fire Jerome Powell. Now apparently he's not. Obviously it's pretty interesting when you see the positions that are opened around the times that he releases good or bad news. It's pretty interesting and kind of supports that insider trading thesis where you see, you know, right before he shares a bullish post on social media, you just see all these calls get opened up in the market. And then ultimately he releases the bullish statement, markets pump, the insiders profit. We even have videos of him basically just bragging about how much money his friends made in the stock market after he had stepped in, made comments that would kind of really push those markets up, essentially telling people to buy. So definitely we don't want to kind of ignore that insider trading aspect. Unfortunately, as retail investors, we don't have that same information. We're stuck just looking at the charts. So it's really hard to perfectly time tops or bottoms if you don't have that insider knowledge. So we just stick to the data, stick to the charts. But what I want to kind of allude to here is essentially this is how you get treated when you're a retail investor. So yesterday, 12 p.m., U.S. Secretary Bessent says he sees de-escalation with China and that the current situation is unsustainable. These were provided at a closed-door investor summit hosted by J.P. Morgan. So this is Wall Street investors and bankers meeting with government officials at a closed-door meeting without media, without any retail investors, not open to the public. So we see here, basically at that meeting, Trump told them that the tariffs are not going to be as high and he's going to likely bring those tariffs down. He also pretty much told a group of Wall Street investors that the de-escalation with China was coming before the public knew. This is what caused the big bounce in the stock market. So insider investors at JP Morgan that got access to this event had insider information before the public was made available. So this kind of stuff happens all the time. We've pointed out kind of all the irregularities, and with the different Congress people that are trading, you know, all these very conveniently timed trades, perfectly timed trades, making tons of money. You know, you'd be ignorant to think that they aren't doing this. Unfortunately, it's just part of the game at this point. You know, we can't really act on this kind of stuff because we don't have the same insider knowledge. But that's why I say, you know, it's really hard to kind of time the tops and bottoms. You know, when you have stuff like this where one single tweet from someone can send the markets up 5% and they've already told all their rich friends before they've made that tweet. So imagine trying to be the average guy navigating this environment. You know, you're trying to look up what's going on in the macro, you're watching the charts, and then a single tweet from someone kind of just throws a wrench in everything. That's why I focus on the trend and the macro side of things, really making sure that the trend is up and in our favor when we're in the market, or it's down and negative when we want to be out of the market. So we're going to flip over to the charts now, take a look. We'll kind of just get off of the political side of things. And so we see here, we're stuck in this downtrending, downsloping trend line right now. You know, price coming right into it. We've got this gap right in through here, so we could see this come back, retest this gap. There's also a little gap down there. If we flip to the daily, we can kind of get a better idea. So generally, the daily gaps do fill. So we'd be looking for a potential swing trade opportunity in the SPY. Let's say if we get this breakout, we come up, we poke, maybe tap the 50-day moving average up here. We're waiting for that back test, that retest of this down sloping trend line. Maybe it comes back with confluence of this gap fill zone in through here, and then that would be our entry. You know, you're getting in here, stop loss below support, and then riding that to the upside. Alternatively, we could reject from resistance here. You know, that wouldn't be uncommon, and we could just come back. Maybe we go back to this lower support zone in through here. So looking for a potential DCA around 505 down to about 480. That's going to be the target DCA zone, a swing trade zone for the SPY. We're not buying right now. We're waiting for that breakout, you know, wait for the rejection, the retest. We can pull our Fibonacci. So let's say, you know, price breaks out and goes to the 50-day moving average. We would take a Fibonacci retracement here just to look for confluence of support. So we already know there's a daily gap fill right here. There's a down sloping trend line right here. And there's our 200-day moving average right underneath. So we've got pretty good confluence of support. So let's look and see if we can find another factor of support utilizing our Fibonacci retracement. And let's say if we did end up topping where this path is. So when you do pull these Fibonacci's until the actual top has shown itself and it started the retracement, you're not going to know where to finish pulling these. This is just for kind of a planning sake. So we're just getting a bit of an idea. We think price could run up into the 50-day. If that's where it runs, and let's say it tops there, we pull our Fibonacci level, and then we look at the entries here, so we can see that 618 comes right in that same targeted zone that we were previously looking at. So that tells me there's lots of confluence of support here. We've got Fibonacci support, we've got downsloping trendline support, we've got moving average support, and we've got horizontal or gap fill support as well. So the only thing we're facing is this VRVP point of control resistance here on the daily. So ideally, what we would like to see, you know, price breaking out in that uptrending structure and then coming back, getting above the key level. So we go up, let's say we tag the 50-day, look for our entry here at this zone. You know, we go up, we break above the 50-day, we come back, we hold the VRVP point of control, and then we're continuing on our way. That is that confirmed uptrend that we're looking for. You know, looking for the initial little bit riskier of an entry right here. That's why we're going to have a stop loss below support, and then ultimately looking to add to that position when we get back above the 50-day. Then we're above the 50-day, we're above the 200-day, ideally in that uptrending structure, and we're riding that trend to wherever it takes us, and then kind of adjusting as things go. But that's kind of my plan for the SPY. Looking price action wise, if we take a look at our momentum indicators, they're looking pretty good here. We have bullish momentum building on the RSI, the MACD, as well as the Vortex and the directional movement index here on the daily. You take a look at the 4-hour, also looks really good. Bullish cross, curling up and going up. So I do think on the low time frame we can sustain a bit of a breakout. I would rather just wait for the breakout and the back test. Entering on the back test, that's always the safer entry when you're talking about a swing position. So just pay attention to that. And yeah, targeting that daily gap fill in through here with confluence of support. So looking at the, you know, that would be about a $540 entry entry. So it's still, you know, if you wait, you're patient, ideally you're going to end up with a similar entry to the current price, but you're going to have more confirmation of that breakout, of that uptrend, more bullish price action that supports your thesis, and that's what we want to see. Similar thing that we're looking at, we're going to keep on the macro here. We basically see the dollars down a little bit, the US 10-year down, nice to see. We want to continue to see pressure on the US 10-year for our stocks to do well. The volatility has dropped back below that 30 level. It is kind of downtrending now. So yeah, a lot of kind of optimism here in the markets. Still, I think warrants it to be cautiously optimistic until we know more details about how China's going to react. This is kind of downtrending price action on the volatility index. So we could see a little bit of kind of more sideways consolidation, really build out that bottom in the markets and then continue from there and see if we break up or break down, getting in on those retests and then riding the direction of the market. We're going to flip to the NASDAQ really quick here to look kind of similar setup as the SPY, although it did break out of this downsloping trend line. So the SPY hasn't broken out yet. We can kind of see, looking here, same kind of plan. We have resistance up through here. So Fibonacci resistance, we can take our retracement tool. This is a common tool you can use to find support or resistance, and then pulling it, when we're finding resistance, we're pulling it from the top, the swing high, to the swing low. So that's right down here. It pulls up all these levels, and we target the same levels that we do on our entries, that golden zone ideally, but the 0.5 Fibonacci can also act as resistance here as well, if the market kind of just gets slapped back down pretty quick. But 618 is the more favorable resistance level. We also have that 50-day coming down. We could see it converge with the 618 here. So if price action comes up, look for that re-entry into this area here. That would be the Fibonacci entry. We've also, if we take a look at our daily chart, we've got that gap fill in there. So lower gap fill down here. Fibonacci, we've got this upsloping trend line here, and we've got this downsloping trend line acting as support. So we kind of just have, again, that multiple confluence of support here. The NASDAQ showing more strength than the SPY, so interesting to note there. And if we take a look at the momentum indicators, it's going to look pretty similar. Bullish cross, bullish cross, bullish cross, upwards momentum, and bullish cross. We want to see that ADX line really start to curl up to give us the kind of the trend strength that we're looking for. Ideally, right now it's at 19. 25 and over is a strong trend, so let's pay attention to that. We see TLT getting a nice little bounce here as well. So kind of everything, you know, getting some relief, although we have that higher low. So TLT, what we could look to do is rebuild a bit of a hedged position in TLT. What we might wait for, though, is wait for it to poke out a little bit higher, retest for that higher low, get in on the higher low, stop loss below support, and then we've rebuilt that hedged position. We did close our TLT position when it broke down up here. So despite the little bounce, we still protected ourselves from that downside. You know, it's still down a few percent from where we exited despite the bounce. So again, talking about just protecting profits, building those cash positions so we can diversify into other assets, wait for that higher low retest, and potentially could offer an opportunity there for TLT. Gold down today, finally getting a little bit of a breather. It has also lost this low. So the kind of the uptrend structure that gold did maintain on the higher, on the lower time frame here on the 4 hour has been lost a little bit. There's still a ton of support. When we flip to the weekly chart, it's still just going to look really strong here. Yeah, no reason to think that gold's just going to completely break down. But if you were looking for an entry into gold, we'll take our Fibonacci, pull it from this swing low to this swing high on the breakout. You can kind of see, I was saying, you know, under $3,000 an ounce, you could look at a potential entry or DCA opportunity into gold, especially if you're looking to build positions that hedge for that kind of risk-off environment, a recessionary environment. So gold, while I wouldn't buy it up here, you know, that's a really kind of scary topping candle right there. I think we are due for at least a pullback. You know, maybe if we go to the 50-day, so looking like we could get a bit of a relief there from the 50-day, but it's really going to depend if we can hold these lows and then see where we go from there. If gold's going to break down from here or if it's just going to continue climbing up. We've seen Bitcoin kind of performing very well alongside gold, except for the last day. You know, gold's dumped and Bitcoin's up with tech stocks holding its gains pretty well. Silver up today 2.6%. So we did actually talk about that. I said that the other day, you know, silver could be that opportunity, that lagger behind gold. It is playing a little bit of catch up today, outperforming by over almost 6% when you factor in gold being down 3.3% and silver being up 2.6%. We see oil down a little bit again. That's good for inflationary concerns. You know, the higher oil goes, the more pressure it puts on inflation. So we want to see that continuing down. Swiss franc experiencing a little bit of weakness right now. That being said, it's still well above these levels of support. So Swiss franc continues to be strong against the US dollar. It's broken out of its bull flag here though, so we could see a little bit of capital starting to flow back to the US dollar with these de-escalations, assuming that they continue. So we want to see de-escalation continue on the macro side of things. We want to see those higher lows on our major market indices, ideally breaking out of the downtrends with that uptrend structure supported by our indicators, and then we can enter the market with our stop losses protecting our downside. We're going to flip over to stocks really quick. Tesla pumping today 6.7%, again just bouncing from this key area of support. So you look there, 1 2 3 candles, 4 5 6 7 different candles here on the weekly have bounced from this same level of support. We can kind of see we are still just stuck in this down sloping trend action. They did miss earnings and they didn't provide forward guidance for 2025. Obviously they're catching a bid today because the whole market is up. Also, maybe some optimism around the fact that Elon has now said he's done with the DOGE, Department of Government Efficiency, and he's back to allocating the majority of his time to Tesla. So we'll continue following that. If we take a look at our momentum indicators, it doesn't look quite as strong as some of the other ones here. On the weekly, we can still see that negative line above the ADX line. And we still see the vortex indicator looking bearish. You know, a little bit of slowdown here on the RSI with higher lows. So we could be putting in that bottom, that base. So what I have recently said, you know, look to build your position down here in this support zone. You know, under 250, not a bad DCA for Tesla. So those buys, you know, if you did manage to DCA under 250 down to this support zone and took advantage of this, then you were sitting on some pretty nice entries, and we're now into this resistance again. You guys know my thoughts with this kind of setup. Wait for the breakout, the back test of higher lows, get in on the higher low if the indicators support it, and ride it to the upside. Nvidia here getting a little bit of a bounce. Nice to see. I'm glad we broke back into this channel here. We didn't get rejected, so Nvidia can continue on here. This is one we recently also bought, so thanks to Trump and kind of some of his policies, we did see them, essentially they banned Nvidia from selling H20 chips to China. We saw Nvidia drop from 115, like up here, or sorry, 115 roughly, you know, all the way down to 86, back down to 95. So offering opportunities to enter Nvidia in here sub $100. I did add to my Nvidia position. I've been DCAing into it, building it. So sub 100 was when I last did my buys. So we did get a little entry there thanks to that negative news, getting some relief. I do consider Nvidia to be the big dog when it comes to AI, when it comes to chips, and I don't expect that trend to really change too much in the immediate future. So continuing to look at building that position. We'll flip down here, Palantir, another one. We targeted that. We were buying at kind of in the mid 90s, 95, 96. So nice to see we're up on that. Baba, we were buying at 105, 106. So another one, we're at 120. Look at these guys. So what we did during that downwards price action and choppy price action, we essentially were just swing trading, mostly Bitcoin. I've talked about it. We made 42% returns swing trading Bitcoin and altcoins in that downwards price action. We were able to build our cash position. So I trade with about 20% of my total capital, and then so if I'm able to get 40% return on 20% of my capital, that's 8% total of my total allocated amount of capital that I've just added in cash. So previously I was about 50% cash. I DCA'd about 10% into the market when the stock market dropped to that level that we previously targeted, so that 485 and lower, you know, putting about 10% 10% into the SPY and the NASDAQ, and then ultimately timing that very well. And then now, so I'm back to 40% cash, and then utilizing that swing trading profits to rebuild my cash position. So while 40% cash is still a really good position to be in, I wanted to be at that 50%. So for me, taking all the profits that I just made swing trading during that downtrend and sticking that in my cash position, I'm now back at about 49% cash when you break down the total overall positions. But I've also got some free buys. So I'm 50% cash. I've got a larger SPY position, a larger NASDAQ position. I picked up some BABA. I picked up some Palantir. I picked up some MP Metals. And I picked up some NVIDIA, all for essentially free. Because we're using profits from other trades, we didn't have to add any of our own capital. We're just using our short-term profits to build higher conviction, longer-term plays with no risk. So that's what I want to see. That's what I try to teach you guys. We're really trying to capitalize on various time frames, and then ultimately the end goal is to build your long-term investments that you're going to retire on, or that are going to provide you that financial freedom that you're looking for. So we did that. We've got those positions. We're happy holding those for now. A lot of these, we're just going to wait. It's going to be very similar charts. Everything is pumping. It's best not to chase the market in times like this. Wait for the retests. Nothing goes straight up or down. We're going to need to print proper confirmation on the weekly charts. So I'll show you that. Things look really good on the 4-hour, but the 4-hour can easily break down. Even the daily chart can break down. It's something we saw in Ethereum. Ethereum has essentially been downtrending for the longest time. A lot of the time on the daily chart, it started to reverse, but that reversal broke down. So that's why we need to wait for weekly confirmation. Right here, you can see essentially we only have one higher low on the weekly. So we're looking for that break. We're looking for that continued multiple higher highs and higher lows on the weekly charts. That's going to be your strongest confirmation of trend. Ideally, your moving averages are looking favorable. Your momentum indicators are looking favorable. And you're also paying attention to all the other factors we talk about. So you're looking at your indicators across multiple time frames. You've got the bullish price action. You're above the moving averages that we need to be above. And we've got multiple bullish factors stacked on our side. So right now, we're just patiently waiting for those higher low entries, either those breakouts to occur, come back, retest support, get in on the retest, and then ride it up. Or we get rejected at resistance, and then we just have to come back and build more support at our low ranges, and then we're just looking to buy into that. So not taking too much risk, not rushing into anything, really just sitting on the buys that we have had. Look for the high conviction plays, look for opportunities to add to those positions, and then going forward, we hopefully see continued de-escalation on the macro front. I'm going to flip over to Bitcoin quickly here. It did come right up into our resistance zone, poked above it, got rejected a little bit, so we'll have to see what's going on here. If we zoom in, look at a few different entries here, we can kind of see the very short term here on the 4-hour. If we come back, look for the retest here. Maybe we come back to our 50-day moving average. So potential for a swing trade opportunity here in Bitcoin. If we come back, look for, anywhere from 87,000 down to about 85,750. That would be that swing trade opportunity. Looking for that kind of just a little quick play here. Otherwise, we're looking for the larger retracement back to that 80,700 or lower target. So paying attention for that on Bitcoin. Bitcoin dominance, still in a technical uptrend. But so that's for that reason, we don't need to rush and get into alts, but we're going to start paying attention to the alts a little bit more. So I covered a ton yesterday. If you haven't checked out that video, a bunch of different alts I thought were performing quite well, showing good relative strength and could be decent opportunities. Ethereum here getting a little bit of strength. Let's take a look at Ethereum Bitcoin. So on the 4-hour, this actually is a little bit promising. That being said, I did just mention how we've had this happen multiple times where Ethereum tries to break out and ultimately ultimately just gets rejected and continues breaking down. But we see nice little volume increase here. If we take a look at our momentum indicators, we're starting to get, we do have a little bit of bearish momentum on the lowish time frame. But if we flip to our daily, we're going to be quite oversold, I think. Yeah, you see here, the vortex curling up. We want to see that cross and the DMI positive line curling up. So if we look here, what we want to see is this price action continue. Higher highs, hold this as support, come back, maybe hold that VRVP point of control. I wouldn't really be interested until we get back over to this area here, and you can see essentially that's going to be quite a similar entry to right here. Not taking the risk because we recognize this same thing has happened many times this cycle and just broken down. We're going to flip over to total 3, so that's what I said. Total 3 looks a little bit better. I know we came up to the 50-day, looks like we're getting a little bit of rejection. If we come back, bounce from here, hold this as support, and the indicators look good, that could be your signal to start taking some swing trades in your high conviction blue chip alts. So that's what I say. Total 3 is the larger altcoins, so paying attention to those. Flipping over to miners, they're doing really well lately. We've just had quite a nice bounce. Yesterday, a lot of miners up 10 to 20%. But if we look at WGMI, which is the miner ETF as a whole, we're still stuck under this trend line. We did come to the high time frame Fibonacci golden zone, and we look like we're building some support here, but we still are stuck under these moving averages, though we could get that rally back up into these moving averages to retest it. But there's a lot of resistance here, so miners will have a bit of work to do. We need to see that uptrending price action, and we need to start taking out some of these support levels to really get back above this trend line for that hopeful another leg up. So miners, while they did offer decent opportunities, we can see Mara here, pretty much every miner would have come into my targeted zone of high value. I personally wasn't buying myself. I have enough exposure in the miners. I have a lot of Marathon, Clean Spark, Iris Energy. I also hold an Into the Cryptoverse Miner Mania portfolio with the people I've been kind of talking with in there, originally sharing all these ideas with. So I have enough miner exposure. I'm comfortable in my cash. I'm just waiting for the confirmation before I get kind of too aggressive and start adding to those positions, because the trend is your friend till the end. So we got to practice what we preach. I can't really invest based on emotion. I'm not chasing something this far off the lows, especially when this was my target range down here. Yeah, not chasing a 43% move to the upside. That's not what we do. That's not smart risk management. So Marathon bouncing nicely. Riot also bouncing nicely from the zone of support. Clean Spark, same thing. So this is going to be pretty standard across the board. If you're interested in buying into these miners, look for the higher low retests. Again, make sure those factors in terms of indicators are looking good. We see Cypher here doing well, also bouncing from that zone of support, but stuck under resistance. Bitfarms, same thing. Support zone. Hive bouncing from the support zone. Hut, Iris Energy. Essentially, it's going to look the same across the board. Core Scientific, also one that I used some profits to get a bit of more of a free position. So bouncing from support. MicroStrategy also here. So MicroStrategy is an interesting one. We see we've broken out. We have two kind of downsloping trend lines here. We had a bit of, it's kind of a triple bottom. You can see the first bottom, matched it here, pretty much triple bottom. We've broken out. We back tested this first trend line as support, and then we've broken out again. But if we do experience a larger retracement here, it could come back to these Fibonacci levels. So this one has played out. We can get rid of it. If we pull our current Fibonacci from this swing low to this swing high, you know, you're looking at the entry anywhere in that 0.5 down to 786. So $260 up to about 295 is that target entry. If we get there, that could be a really good swing trade opportunity for MicroStrategy. So paying attention to that. But ultimately, kind of some of the more miners that I'm really bullish on right now. Marathon, obviously a very high value in terms of their Bitcoin holdings. We've got Clean Spark, a really efficient, very profitable, strong miner, very consistent growth, always doing very, very well. You know, good, solid balance sheet, lots of Bitcoin, not a lot of debt. We see Cypher here. Cypher, although not the strongest from a fundamental mining perspective, they do have that relation to SoftBank as an investor, and SoftBank has the relationship to OpenAI as the primary funder of the Stargate project. So expect Cypher to likely be a data center provider for SoftBank. Hive is one I really like as well. Similar to Marathon, they have a lot of Bitcoin for what the company is currently valued at. So just to factor in the whole business, all the data centers, they're being undervalued pretty drastically in my opinion. Iris Energy, kind of one that I really do like them. They're very efficient, very profitable, consistent, fast, heavy growth, but they don't have any Bitcoin. They sell it as it comes in. They're really trying to branch into AI HPC. I've kind of been holding off on Iris Energy a bit more than kind of Marathon or CleanSpark, just focusing on the other two. Also, trying to focus on companies that give you really high valuations when you discount the mining business. So let's say worst case something, the market implodes and the mining business just tanks. There needs to be some tangible value there to protect from that downside. So having a substantial amount of liquidity or a very large treasury gives you that kind of that level of safety when the market drops. You're able to handle the volatility a lot more than your peers because you're better capitalized. TeraWulf and Core Scientific are two really interesting AI plays, I think, going forward. Kind of undervalued AI data center providers. Bit Digital is another kind of smaller cap AI HPC related company. Good strong revenues, but kind of not really showing the same strength that I wanted to see. MicroStrategy, if we get that opportunity to enter that swing trade, we'll definitely look at taking it. So just kind of recapping, things are pumping, we're cautiously optimistic. We want to see further de-escalation on the macro side of things, and then just pay attention to the technicals. Watch for those breakouts, watch for those confirmed higher lows. Make sure that you're stacking those bullish factors in your favor before you're taking positions. I'm personally kind of just sitting on my hands again. We bought when things were cheap. When things are pumping, we sit and we wait. We wait to see where the technical retracement is likely to show up, and we enter on that retracement and riding again, focusing on the trend, not focusing on the daily price action. The macro trend is all we need to really know to really profit consistently over the long period. So focus on that and continue practicing the skills, get on the charts, so when we do experience these breakouts, these setups, you're able to recognize them and you're able to act on them. So thank you so much for watching, guys, and I'll see you in the next one.